What is good, guys? It's Rey-Jay back with another video, and this one I'm going to break down what happened to the market, why we witnessed some crazy manipulation this week after the 4th of July. I'm going to give you guys a recap of how this went and what you could learn from what the market just did. Now, before I break things down about all this information, before I get into any more details, let me just mention a couple of things real quick. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link. The offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks. Anyways, now let's talk about something that happened in the stock market. The last couple of days have been absolutely insane, and they've tried very hard to trick you and I. Who is doing this? I'm not going to call them out. I really don't want to do that. What I just want to say is that there is manipulation, and this market is designed to trick retail. Let me show you what I'm talking about when it comes to tricks. This was just wild, okay? So we had the 4th of July, the market pumped approaching the 4th of July. I'm sure you guys remember that. Then we go back to Wednesday. What happened on Wednesday? We had the FOMC minutes being released. Many of these Fed officials are being hawkish. They were saying so many hawkish things, saying that a recession is coming. We want weak data and this and that. And what did the market do? The market was trading sideways. It dropped a little bit, then got a crazy pump at the end of the day. So they pumped the market off bad news that came from the Fed. The market pumps, which is kind of ironic. And many people started suspecting that, hey, maybe the market is just going to try to hold up. So when the market pumps this crazy, it went from coming down to like 442, going all the way up to about almost 444 over the last like couple of hours. So lots of people started buying calls over here and they started holding them overnight, especially for Friday. People started buying, especially retail. And what do they end up doing? Well, hold on a second. The Fed said negative things, and that changed the way the market started to interpret the markets. Why? There are many reasons. It could just be because they interpret data differently after what the Fed said, or it could also be because so many people started going long on the market and they ended up just hammering so many positions. That could be another thing that was going on. What do I mean by that? People started buying calls over here. They turned bullish when the market started pumping at the very end of the day on Wednesday. And then what happened was the jobs numbers came out and we saw about 497,000 private sector jobs added. Now, the stock market used to like strong jobs reports, but it ended up changing its mind and its interpretation because of what the Fed was saying. So, what the stock market did instead was, oh, we saw some strong numbers. Now the market is going to sell off very hard because that incentivizes the Fed to be hawkish. Now, you could argue that this is legitimate. Sure. Could be legitimate. Sure. But what they did is they started tanking the markets very hard during the pre-market. The large sum of this drop happened during the after hours and the pre-market. Actually, not the after hours, the pre-markets on Wednesday. So the market tanked like crazy. It gapped down like crazy. And then the market continued to sink down. And as it was sinking, people started buying puts. We saw a lot of put buying over here, especially when we broke below 438. So what did they do after that? Oh, when the market drops, we start pumping the market again to screw over all those people. And as the market pumped, we started to fill this gap right over here, right? There's this unfilled gap, a giant unfilled gap. So many people are watching this. They're thinking maybe this gap is going to get filled. So people start buying and buying and buying. And then that takes us to today. What happened today? What happened to the markets? I'm going to break that down just a couple of minutes. So why was the market very choppy in the morning? As I mentioned before, we had all this data dropping. Just as a quick recap, the non-farm payrolls were lower than expected, which was technically bullish for the markets. 209,000 is lower than 225,000 as the consensus and 250,000 as the forecast. But the unemployment rate was only 3.6%. And that is also not really good news for the markets because the market wants high unemployment and we want less jobs being added. So we got the less jobs being added right here, which was good for the markets, right? But then right here, we got bad data. The unemployment rate was too low, suggesting some strength in the overall employment sector. And that tells us that the Fed has some incentives to be more hawkish during the next meeting, and it increases the odds of another rate hike. So very mixed data, right? So what did they choose to do? Because it's mixed data, the market did not have a clear direction, at least during the very start. You can see right here, I mean, right over here, we can see stocks ended up tumbling on Friday at the very end of the day. But these big moves that came later on were not caused by the data itself. It had more to do with trickery. And let me show you the trickery. In the morning, the market was very sideways, very, very choppy, right? And then when we opened, we remained very choppy for the first hour and a half to almost 2 hours. For the first 2 hours, very sideways price action, nothing much was going on. Then, for the next 2 hours, they pumped the market crazy hard, insanely hard. So going back to this chart on TradingView, you will notice that they basically made it seem like we were about to fill this gap up here. And we got this breakout above 442, our resistance. So we actually came above this resistance right over here. We broke above this resistance zone right here, above 442, the zone right over there. We also broke above 442.5 just temporarily. And we almost started filling this gap. A lot of people thought we were going to go up to 443. That was a possibility if we broke the high. But we also had this trend line, which I drew out, and I showed you guys this. So what happened was we got this breakout. It looked like the market was getting ready to fill this gap. And just when enough people turned bullish, started buying calls, going for that gap fill, they end up rug pulling the markets. They took us down to this trend line right here. And what else is very interesting is there was a lot of open interest for the 442 strike, but max pain happened to be at 438. So it's always important to look at max pain. 438 is where max pain is, and that's where they tried to bring the market down to cause as much pain for the options holders as possible, both the calls and the puts. How interesting is that? They're trying to screw everyone over this time around. They tried to screw everyone over. So what did they do? Sorry, right here, they smacked the market down, and then we hit this support zone right here, right? And then around this time, I was recording my next video, and I told you guys, hey, if we break this 441.5 area, we're going to sink down to at least 40.5 or so. If it bounced off this, we could have made an attempt to try to break all the way up to like 443. So we ended up getting that break, and that was your signal to, you could have a short opportunity right there. And then 440.5 to 440, we actually ended up breaking below that as well. We broke this support right here. And you could see, let me just show you how this worked. We came down to it. So right here, the market bounced, and it tried to bounce for about 5 minutes, holding the support. Came right below it to about 440.25, touched resistance, came back up, down, down and up, back and forth. It got stuck between 440.25 and 440.5. Then eventually we broke down for the last hour, and we basically had the next support at 440, which is like the previous high right here. That failed too. That was a signal this thing's going to come all the way down to these lows. And they tried to bring this thing all the way down to 438. They came just short. They stopped at 438.61, at least according to TradingView. And that's what ended up happening. So, like I said, guys, this trapped so many people. This tricked so many people. A lot of people did not see it coming like this. People maybe thought we get like a small drop and maybe a rebound. Instead, it was just a flush straight down very quickly. Crazy stuff in the market. Just look at this volatility. Look at this volatility. If you were told that this was a normal stock, like a small cap, you would probably believe it, but you'd have a harder time believing that this is SPY or SPX. Very wild volatility in this market. It's insane. So the lesson to take away from this is the importance of, if you are scalping, if you're day trading, okay, take profits quickly in a market like this, because things could go south very fast. When your target is met, that's your take profit opportunity, and then use a stop loss in case it does end up dropping like this. Also, watch for like trend lines and support and resistance levels. And I learned that you always want to look at max pain just to be safe. Have that in the back of your mind just to be safe. And simultaneously, always know what support and resistance is going to be. So for example, like right here, you're going to have it in your mind. Where is support? Where is resistance? What level am I watching for? It wasn't just this level specifically, but I also had this on, I think, the 3 minutes time frame right here on SPY. I'll just show you what I was talking about. So like right here, you could also look at the 3 minutes 50 EMA. This was acting as support temporarily. If it broke below this, I also called this out earlier. If it broke below this would be very bearish. And I'd have a target around like 440.5 or so. You could have like entered after this like bounce and like break, and then you also had a nice entry like right here for like potential puts. But anyways, if you did end up entering A retest of this EMA could have been it, or you could have entered during this like second breakdown, and your take profit could have been around like 440.5, if not even lower than that, if it continued to look very weak. So what you could have done is you have like your stop loss set. You could end up just raising your stop loss as time goes on, and the more it drops, basically, the more profit you make. You could just ride this thing down moving forward. That's like another strategy you could have used. I'm just calling this out as a hypothetical, but this was just very wild, right? A lot of people were not expecting it to just flash down for the last couple of minutes just like that. It's just very, very crazy. But that's the importance, and that's the lesson to take away from this. That's why I constantly call out levels like this. So let me just show you the levels. Just like this, I have all these different levels drawn out. So for instance, if you're watching 442, we got to break above it, but we came right down below it. That's a very important level. And because we failed to hold it, you could have just like exited your position from here because, the market was showing signs of reversal. It came down. Our next important level, well, we had some support at like 440.5 after we broke below 441.5. But then the real support zone is going to be like right here. You can see how I have this line drawn through almost everything, or like the majority of these trend moves. That's going to be like 440 flat. A break below that, and it had the potential to come all the way down to like 438. That's like the next major support zone. But we also have to watch these lows from previous levels. So very tricky stuff. But the lesson to learn is, if you're scalping, take profits quickly. If you're day trading, it's okay to take profits fast. The market could switch on a dime. Sometimes it's very tricky, so you have to manage risks. If you're confident the market's going to make a move, do not go all in on a play. Don't risk 20% of your portfolio unless it's like a very tiny account, a micro account. I mean, that's where things could change as some exceptions. But besides that, you should not be risking way too much on one specific play, and you should be very careful with what you're doing because the market could be very tricky. Always remember that there's a lot of trickery in this market. They want to screw people over. They want to trick them because the market is like a football game. There's a winner and there's a loser, all right? Or any sports game. There's a winner and there's a loser, right? In essence, if you're making money, someone else is losing money on the other end. And if you lose your money like this, if you lost your money on this play, like for example, hypothetically, someone else took that money, they took your money, they made money on the other end, and they used it to do whatever the heck they want. See how this works? It's all just a game. So I hope this was very clear for a lot of people, how there is a lot of manipulation. But here's the thing, this is not meant to discourage you. This is meant to encourage you instead, because we could use days like this as motivation, and we could learn from this and still trade on a daily basis. I trade every day and I make money the large majority of the days. Right? Not trying to show off in any way, shape, or form. I'm just telling you it is possible for retail investors, for everyday people to master these markets. There are pro traders out there that have strategies that work very well. I know a lot of them. It works. I know some very strong traders who do this on a daily basis. It's very possible to make a living off trading on the stock market. But internally, your own mindset and you is going to be your biggest battle. All right. So thank you all so much for listening. Hope this was generally like insightful and interesting for a lot of you. Please have a great day and have a great weekend. Brush off any losses if you did have any, and stay strong because we have a next couple of days coming. We have a next week coming, and things will be much better then. Thank you for listening. Have a good one, guys, and I'll see you guys in the next one. Market to the moon as the long term is very bright, and peace out.